Happy Friday, traders. It is 8:01 a.m. on Friday, the 12th of April, 2019. Thanks for joining me here again today. It's Tax Day Monday here in the United States, as well as in Canada, I believe. It's awesome. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at the overall market, clearly a risk on. There's several factors here that are supposedly driving this. We'll talk about those in a second. But currently, we are pushing higher. Pretty good risk appetite coming into today. The leader of the pack today is crude oil. Crude oil wins the race. It's trading at $64.50 almost, up 90 cents, up at 1.4%. The Dow's doing pretty good, up 242 on the futures, 0.93%. The Russell follows that. Remember, the Russell's been the laggard here all along, just showing weak attempts at the high and falling back into the range fairly easily. And it's right at the top of the leaderboard this morning, followed by the S&P up 18.75 points. We're enjoying an 11.5 point gap currently to the current price from yesterday's range, but to yesterday's settlement we have 18.5. Very low probability of a fill there historically. The euro is next, and so on and so forth. The laggard, of course. The VIX futures are down to 13.2, down 63 cents or 4.5%, sucking the life out of those premiums, options premiums. U.S. dollar down 43.5 cents, and the Bund, the bonds and the 10-year notes are all down, of course. So solidly a risk appetite day, high risk appetite day. Looking for the key thing this morning is to look for whether the market reverts or if it continues to push directionally. That's going to be very important to see early on to set our sights for what we're looking for today. The calendar is really the impetus behind this gap up. China put out some really strong numbers last night. The balance of trade came in at plus 32.64 billion for March, plus 32.64 billion. The expectation is 7.05. The prior is 4. So real big numbers there from China on the trade balance. It seems like the tariffs are not working, I think. So we'll see what the cause of that is, but really huge. Expecting growth. The economic minister came out, said they expect some pretty moderate growth, continued growth in their exports. Exports year on year came out at 14.2% versus the expected 7.3%. The prior month for February, year on year exports were negative 20.8%. And they came out positive 14.6. Imports dropped. So again, balance of trade is in favor of China here. And then we got, import prices, export prices from the U.S., industrial production in the Eurozone, and so on. Looking ahead, we're looking for Michigan sentiment. This is the prelim number. It does move us around. In most cases, expecting 98. The prior is 98.4. That comes out at 9 o'clock Central, 10 Eastern. We're expecting Fed Chair Powell to release some comments as well, and that brings us into the weekend. It's the weekend. So that's what we're looking for today. What did we expect yesterday? Now, remember, we pushed down on news yesterday afternoon on the ECB comments. Didn't seem to inspire a lot of confidence. But yesterday we were looking for the market to bounce back into the range briefly and then push through 2,900 with a quick squeeze to 2,904 and then continuation from there. as the main idea. The secondary push the overnight high, tangle up in the 2900 area, and then just sit sideways with a gap zone below. The third scenario is to pull back on an open test down, drive up, and the target is 2912. Does that sound familiar? 2912. I put it on here because it's a key area to test above, and guess where the overnight high is? 291175. So we didn't accomplish any of those plans yesterday. This was a surprise up to this point, up to the big drop. I was still looking at scenario one, chip chop, chip chop, chip chop, chip chop, and then start to push, squeeze through 2900, 2903, 2904, consolidate for the afternoon, and then start pushing higher into the close. And then we got this release at midday, which was weird, where we saw quite a bit of volume. See that volume there? And very strong sell delta there. Created a beautiful opportunity at 2891.50. The IB low volume node, and the mid with a clearly defined risk created a beautiful opportunity there for a rotation to retest this 85.25. In yesterday's micros webinar for Convergent members, I talked about 2885.75 being the key scale out area on the secondary lot as we're scaling out, and I was looking for it to continue down to 2882.75. Instead, it put in a higher low and walked itself up to the low volume node and held there. Remember, this 9150 area has been carried over for a couple days. It's a stock zone for today as well. Pretty important area, but we're way up here today. We're trading way up here. Okay, so that's the recap of yesterday. Just did not behave as expected. There's the news event right there. The SOC, the news event is basically the prior day's close, 2894.75, 2895. Didn't record that as an SOC. It's the markets. I just didn't record it as an SOC. I didn't see that as a U.S. Kind of event. But there it is. All right. So going into the overnight session, opens up. Markets anticipating big numbers. Just struggles with 28.96 for a while. Tests at 28.96 right there, and then holds steady. For the releases, the release was at 1:30 Central, somewhere in here. And it just shows like it took till 3 o'clock to the Europeans come in to ba-boom, lift this thing right through 2900, an initial spike and a pullback and a continuation. And now we've got a continuation with a very poor high. So that's what we're looking at this morning. The market's really created two distributions. So there's the anticipating the release from China distribution, a middle distribution at the figure. Remember, there's a lot of volume, a lot offered here for days and days and days. And so traded that out, and then we've built a third distribution at the top, and again a weak high in the overnight session. We have the singles at 29.12 from October, just sitting there, which haven't been closed yet, and 29.12 is the high. So that's how things look. Inventory is almost 100% long. In price and in delta. The delta is really strong for the overnight session, up 13,000 is the imbalance to the buy side on the futures at the moment on the S&P mini futures. So it's just it's looking pretty strong this morning. The expectation is that it's not likely to push back, but who knows? We'll see what the market's appetite is. So that's where we are. Also this morning, we got some key numbers. JP Morgan released had a really good quarter, attributing that quarter to strong earnings on interest rates. Came in at $2.65 versus $2.32 estimated, and the revenue came in at 29.85 versus 27.9, and it's just a strong performance on that company. Wells Fargo, another bank, also released this morning. So I'm expecting the banking sector, the XLF, to be fairly strong coming in. Wells Fargo reported 1.2, $1.20 versus $1.08 expected per share, and 21.6 versus 20.9 billion in earnings. And that's what it looks like at the moment. We do have, if you have Trade the News, it's the earnings calendar is excellent on there. Be sure to pull up your calendar tab, and then to the left, choose earnings to see what's on deck every day. What do we have in terms? So that's the review. In terms of the review, we're good there. What do we have in terms of what we're looking for today? Of course, before we get into that, it is Like Friday. Don't forget to hit the like button today. Take a moment, find the like button on the YouTube screen. If you're looking at this on the Convergent website, just hit the YouTube button at the bottom. It'll take you to YouTube, log in, and hit like. It helps me out, and I'd appreciate it. All right, so we are way up here. Okay, just continuing to squeeze those shorts. So we're right up against an overnight profile that looks a whole lot like this, right? So the overnight profile is really has a really weak high. That high is expected to go this morning. Expecting an open auction out of range. Now with a gap up like this above the prior highs, remember we hit the 2,900 several times in the overnight. With a gap like this, there's a higher probability of a drive one way or the other. So you got to be cautious on the open. We do have a number at half hour in, but be cautious on the open that the market's completely out of balance, which may cause, moving averages and whatever to cross over this morning and get some OTF participation, some higher time frame participation. So in general, I'm looking at an open auction that is likely to push this overnight high immediately, test down, come down, and then it starts to look like an open auction, and then it starts to look like the opening swing, and then we consolidate here in the middle, and then we start to squeeze higher. Looking for this to push through into the 16 and potentially the 20 area here. It is Friday, but I'm looking for a trend day up. Eventually, it may start out as an open auction that consolidates, that builds a big belly, which is fuel for the push, and then looking for it to continue higher from there. That's the primary scenario, expecting the gap to remain open. The secondary is a selling scenario where the market reverts back, looking for it to change the color, but it didn't take. Allons-y. Push up through the overnight high, squeeze a little bit, and then impulse down and push through towards the 2,900. Get into this 2,903, get tangled up, and then hold steady into the close, so that we do end up with, again, a higher high, higher low, with a gap remaining open, and a market that is primed basically to continue above the 2,900. The tertiary, or the third scenario, is expected to be an open responsive to rebalance, to help rebalance the book. If you're long from way down and it gaps up, a lot of people might take some profits. Rebalance, pull back, and then looking for that impulse higher that gets us through this 29.1675 area and then start to push into 29.23 and 29.27. If we see this OTD type open, what's going on here, mouse? If we see this OTD type open, you just have to stay off the shorts. So one word of caution I'll give you for Friday. If the market opens and it's not responsive, it is not selling. In other words, it's not responding to the fact that we are outside of the prior auction, that it's out of balance, right? If it's not able to pull back, what you have is a gap and go market, most probably. In a gap and go market, sure, you can scalp to the short side here and there and make a few ticks here and there. But really what the focus should be, in my opinion, is on finding a pullback with a clear risk reward parameter that you can jump on and just scale out and hold a runner. That's really the target, the goal for today. That's where the money is. It's seeing that the market's not able to revert back, not able to sell back to the prior auction, back in below 2,900. Seeing that means that we need to find a spot to lean long and lift the offer and then look for a continuation. And the goal is to hold that. We're going to get some range, right? So at some point from wherever you think the market turned, we're probably going to get 10 to 12 points of range. That's the most likely scenario. So you have room as long as you are catching it not too far. In other words, you're not catching it 10 points up on a pullback. Let you just relax. Define your risk, relax, make sure your risk is reasonable. In other words, it's not 2 ticks. And then look for a pullback to get long. That is under the circumstance that the market is unable to be responsive. In other words, it's not got any energy to the sell side or any interest or any participation to the sell side. That's kind of an easy trade. You're just going with the trend. And the gap is the thing that helps us see that the market's intent is to reprice higher. So that's what I'm going to look for today. Any pullbacks, looking for any kind of difficulty for sellers to push prices lower. A lot of effort, maybe hitting the bid, but not getting anywhere. That's the kind of scenario that I look for to lift the offer, get long, and then as long as I see there's an effort to sell and it's not succeeding, then that makes it hard for my stop to get triggered on the long, or harder. And that's, just be a smart trader, right? When you see days like today, you have an imbalance, there's a big opportunity to make money. Yes, we can make money in a balanced market, sell outside in and all that stuff. But the expectation today is inside out trading. And the most important thing we want to assess is the market able to sell? Do the sellers have any strength at all? And if they don't, then we want to get long, stay strong, and just let it ride. Okay. And depending on where you are from the low, you can project, the potential daily range that you can profit from. It's simple, but it's not easy because you have to stay clear and not have 50,000 inputs that stop you from actually taking the trade when it happens. Good luck today. Happy Friday to you, and have a great weekend. Take care.